Joe, Michael, we are back together for AGTP. How are you?
I am good. Is the power on in your apartment?
I hope you have fun. I hope you have fun.
Are we going there right away? That's where
We
we're
are right
starting.
away. We didn't even start and beam directly.
It's
Yes,
the first thing out of your mouth is about
I
the
paid
power.
my bill, Michael,
You paid
with
your bill
stablecoin. Yes, so it
with
was instant
stablecoin.
24/7. They received the money instantly, and boom, I got my electricity back.
Exactly. Exactly.
How are you, Michael, today?
Yeah, on fire, man. How are you doing?
Yeah, I'm doing good. I'm doing good. I'm doing good. Just for your audience to know, we just finished a 3 days massive event in Asia. You can go to our Asia Tech podcast channel. You will see Michael recorded for like 5 hours live during 3 days, and we had like over 45 days. I think close to 50, right? Because I keep adding more guests at the end for you, Michael. And no, it was super great. It was all about the future of finance, stable coins, agented payments, all of these things. We learned a lot. It was super nice. And so if you want to have a look, go to our Asian show. It was super cool.
It was amazing. It was really amazing. Super high energy. The guest quality was insanely great. And yeah, we also had the founder, not the founder, but like the president of Money 2020 on. So
Yep.
that was very high value as well.
Very high value. Yep. Very high value. Super high value. A lot of great guests, right? Like from banks to fintechs. A lot of people came on the show. So it was really nice.
Really
But
awesome.
maybe enough for ATP. What about we talk about the latest tech news of the day on AGTP, Michael?
Yeah, I mean, look, let's welcome everybody back to AGTP
Yep.
Daily. This is a show that goes live every day, every weekday at 11 a.m. Eastern Time in the United States to discuss the most important tech and tech stories in the US. What is it? Today's Thursday, isn't it, Martin? The 23rd of
Yes.
April, 2026. It's hard for me to remember.
Yep.
And what are we going to talk about today? So we're going to talk about, is the US headed into a tech IPO super cycle? There's some big stuff coming. We'll get to that. Is Anthropic now worth $1 trillion when I think is it last raise, it was worth 350 billion, which obviously both of those numbers are huge. And did some unauthorized group get access to Anthropic's Mythos? And if they did, nobody seemed to have died, but we'll talk about that too. And Deepseek, which is China's flagship AI lab. If everybody remembers back in January 2025, they just like exploded out of nowhere, changed the game for like what a frontier lab could look like. Apparently, although we'll talk about that too, are they going to raise funds? So that could be interesting to talk about as well. Let's start with our tech IPOs about to be on fire in the United States.
Let's do that.
Us do that indeed. So it feels like the U.S. is on the verge of being on one of the biggest IPO surges in IPO waves in U.S. history, and it's interesting, right? Because this is maybe the first time. If you go back to when this happened the last time, it was like Google, and you can go even further back for Microsoft and stuff. But it's like the companies that are potentially going to do IPOs and do IPOs potentially relatively soon, they're not profitable. SpaceX, OpenAI, and Anthropic. But apparently, I think it's actually going to be higher. Like the Reuters story that we're referencing here says they could have a roughly $3 trillion combined market value. I would make the case that it's going to be even higher because SpaceX alone is targeting, and we talked about this a few weeks back, $1.75 trillion.
Wow.
Right. I mean, they're basing this. We'll get to Anthropic's valuation after we do this story, but this article was basing this on Anthropic having a valuation of $380 or $350 billion. Yeah. So, but it's weird. It's almost like the market feels like this is a referendum on whether public markets are willing to treat artificial intelligence and these frontier technology firms as if they're going to become like infrastructure and strategic infrastructure. And that's a difference, right? Because when Google went public, when Microsoft went public, it was very like company specific, but it wasn't like they were going to become infrastructure. And to be fair, Martin, a lot of the conversations that we had during, I don't want to keep referencing this event that we did, but a lot of the conversations we had around agentic AI and just AI in general, and these frontier labs centered around the fact that, and particularly for people that had seen multiple tech waves, that this was different.
Okay.
Yeah, this was different, right?
Yeah. I
Sorry, go
I
ahead.
f- I completely feel it as well, right? Like when we talk to all of these people in the space, all of these people who are building things, who are using AI, stablecoin, or all these different fintech, it really feels right now AI is is like both, people are really willing to use it every day, and they are scared as well because they fear, their
Yeah.
competitor
Yeah.
use it more than them. So there's this big FOMO of like, I need to do it more, basically, right? And like,
There's tons of pressure, Martin.
there's
Look, I
tons of
talked
pressure
about
from
this.
everywhere. Yeah,
Again, I talked to this with a bunch of senior executives, but also
yeah,
with board members. The board members are putting pressure on the C-suite, and
yeah.
then the C-suite is putting pressure on senior management.
Mm,
Literally, the phone call goes something like this: "What are we doing in AI?" There's not even a specific thing that they're trying to accomplish, but like their peers are pushing AI into their companies, and they feel like they're going to be left behind if they're not doing the same thing. And in some ways, they don't even have, I wouldn't say a strategy, but like a unified strategy.
mm.
But they can't go back and tell their peers, like, "Oh yeah, we're not doing anything there."
Yeah, and you're right. It really comes from the top, right? It comes from the
It
CEO. It
does
comes from the board.
from the board.
It's like, okay, we got to do it. Otherwise, as you say, we are going to be left behind. Our competitors are going to do it. They are going to be faster than us. They are going to be more productive. And to be fair, do you remember that when we talked about the Facebook token maxing story, right? Like
Yeah, yeah, yeah,
they said they spent 60 trillion token. I
yeah,
mean, when your competitors does that kind of thing, you're like, hey, like, I mean, right? It's like, yeah,
yeah.
I
What are
get
we
to do
doing?
something about it, right? Like,
What are we
it's
doing?
like if all of a sudden your competitor have like a 10x marketing budget, right? You will be like, we have a problem, right? And so here they have a 10x, like more like product building budget, I would say, right? Because the tokens are not only for the dev team, they can be used
Yeah.
across the entire organization. So for sure, like, you're like, okay, yeah, we have to do something, right? So this is real. This is real for sure.
Yeah. So if you look at the companies in the tech space right now that dominate the S&P 500, Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla, they're all super profitable, right?
True.
And the question is, where would these companies fit into with these other seven companies? But here's another thing that's actually really, really interesting to consider, Martin, when you think about these companies going public. Private markets are willing to take way more risk than public markets.
Okay.
Right. So venture capital, and these are not sort of venture style investments. These are more like industrial style investments, right? Nation
Mm,
state style investments. And if you think about it in that within that framework, the people that are investing and the companies that are investing in these AI companies right now, if you're just specifically Anthropic, OpenAI, right? What was the third one? My brain is dying. Yeah, and SpaceX. Yeah,
yeah.
they're trying to build these. They're trying to build these massive platforms. But here's the thing: the private markets are willing to take way more risk on these companies than the public markets potentially. But if they do go public, and if for some reason they get included in the S&P 500 through some exemption, right?
Mhm.
Then if you understand the way these indices work, because in the private markets, nobody has to buy this. There's no forced purchases of any of these stocks,
Yep.
right? But if they get if they get index included, if they're included in the S&P 500, then every fund manager that owns an S&P 500 index
Hmm.
fund has to buy these companies.
Yep. True.
No, but they have to buy them, right? Because
Mhm.
I forget the percentage of these seven companies, what they make up of the S&P 500, but it's highly concentrated. And
Okay.
if these companies go in at trillion-dollar valuations, right? I mean, think about it. Even Nvidia is what, like a $4 trillion company. So if SpaceX goes public at 1.75 trillion, it's almost half.
Yeah. No, it's true. It's going to change a lot of things. Yeah.
It's going to change a ton of things. But the important thing is that people will have to buy them. We
Hmm.
did these trades all the time on a portfolio trading desk because the portfolios, by definition, the main portfolio that everybody owns in every country, like in the US, it's the S&P 500 and maybe the Russell 5000. But if you have to buy the index, it means then you have to sell a company that's in the index and buy the new one. And billions of dollars go into it. So that means that the valuations of those companies could go even higher.
Hmm.
But then what happens? This is the real tell. And this is why I think this is super interesting, because if in fact they do go into the S&P 500, then you're really going to try to understand, like, do the public markets feel like these companies have the same level of value that the private markets do, and are people willing to take a risk on them,
Hmm.
particularly if they're still losing money?
Hmm. So you mean that it would go really high and then go down really fast as well?
Doesn't necessarily have to go down really fast, but then it could be an opportunity to short these stocks too, right? So
Okay.
if you look at a typical IPO,
Hmm.
individual, so these are for institutional investors, right? Like mutual funds, index funds, and stuff like that. They're forced to buy. Um, and I can't tell you the kind of chicanery that goes on. And normally they're the index funds are targeted to the close. So just watch what happens. If I wish I could have a stock that you and I could watch together and see
Okay.
what happens during the close, because it's benchmarked to the close. What normally happens is the traders
Mm-hmm.
will buy it during the day, spike it into the close, because that's how they make money, because they fill their institutional clients at the close and they sell them the stock that they've bought during the day.
Okay.
They'll also leave a little portion of the stock that they purchased short
Okay.
because they expect it to go down the next day.
Okay.
But the real tell is that then what do hedge funds do?
Mm-hmm.
Do the hedge funds then go, that's way overvalued from a price to earnings basis or whatever sort of metric that they're looking at, and then they borrow the stock and short sell it and see what happens. Most IPO stocks, most of them, particularly on an index inclusion, will then trend downwards for the next like 3 to 5 months,
Oh wow. Okay.
and then start coming back up as the stock price normalizes and as more information comes out about it. But this is going to be super interesting to watch these companies. Yeah,
Yeah. 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 Especially because none of them is profitable, right? Like
not yet.
so it's which means that the entire valuation is based on what? Is based on the potential gain, right? Like, and as you said, like maybe the public market is not as willing to take as much risk as the private market, right? Like
Exactly.
from like a private investors, VCs like point of view, yeah, like you're going to invest for future gains, right? But
Yeah.
here it means what? Like the dividends are going to be absolutely zero on SpaceX for how long, right?
Yeah, but
Like
also,
this, yeah,
when would the venture capitalists sell their stock? So
yeah,
they're buying their stock all pre-IPO,
yeah.
and there's this, not this game, but there's this war on the close, right? For the people that bought their stock in the private markets,
Hmm.
if they believe that it, like, you have to watch the trading. It's super fun to do actually on the close for a stock that's IPOing, because you
Okay,
don't know how many of the venture capitalists are going to sell in the close either. So you're sitting there thinking you're buying stock all day, expecting to make profit on that as well.
okay.
And at the end of the day, if the VCs come in and just like jam it down on the close because they're long, they're not short selling,
Hmm.
then you
Hmm.
could lose money on the stock you bought all day. Like, it's very, very risky
Okay.
because they've already made a ton of money. Like, if you think about, if you're a venture capitalist and you invested in the early rounds of, like, let's say Anthropic,
Hmm.
when it was, like a $10 billion company, which sounds insane because that's not normal.
Yeah,
And it goes
10 billion for a
public,
startup.
right? It's not a startup, but it goes public at $1 trillion.
Yeah.
You've turned your $10 billion value, depending on how much money you've invested, right? Let's say you put $1 billion into it at $10 billion valuation. That's 10%. That's possible, yeah.
Hmm. Hmm.
But then let's say it goes from $10 billion to $1 trillion. What is that? 1,000 times higher? No,
It's
100 times higher.
100, yeah, 100.
Yeah, but now you've taken your $1 billion and turned it into $100 billion.
Hmm. Hmm.
So you don't care what the closing price is. You're just
Hmm.
you could dump like 75% of your stock, hold on to the rest of it for the next 6 months, and then make that money back there too.
Hmm.
So you have to really watch what's going on in the close, and you really have to try to get it. That's just from a monetary and a profit taking
Hmm.
standpoint. But there's so many little dynamics that take place on an IPO day that, like, most people have no idea what's going on, particularly if they're included. Because two things can happen. One is just the IPO itself,
Hmm. Hmm.
but the second then is if it gets included into the index.
Hmm.
But
So,
there's this war going on both of these days. Sorry, go ahead.
okay, so walk me through how it works. With an IPO, but not be in the index, and
Yeah,
then you
because
can go to the
again,
index
these
after?
companies, so there are requirements to be in the index, and one of those requirements is some sort of sustained level of profitability or some
Okay,
income level.
okay,
But again, sometimes the exchanges make exceptions,
okay,
and some stocks, although not a lot of stocks, actually go into the index when they IPO,
okay,
but not all of them.
okay,
So, but there are two events, right? One is just the IPO itself, but there's still a lot of gaming going on the day that the stock IPOs, because it IPOs at a certain price. But what happens is, to create demand, because like you and I have not been able to invest in Anthropic up until now.
nope, yep.
There are plenty of ways we could, because there's a secondary market for it, but like the price is so high, and there are people that are willing to pay a price that's way higher than what you and I would pay.
Hmm. Hmm.
It doesn't mean we don't have to invest $1 billion. We could literally invest like $1,000 or $2,000,
Hmm.
but we're going to get crowded out of the market by people that want to buy up all the stock. I mean, look, one of the stories that we're going to talk about later is Anthropic's valuation, and just to see like what the demand is like. And we know, because we did a story about this a few days ago, how Anthropic's valuation could have gone from 380 to what would we say 850 because they were trying to normalize it with what OpenAI's valuation was, right?
Yep.
But that what that means is that the demand for that stock is so high. And like if you and I start making phone calls in the secondary market and just be like, can Martin Runford buy some of this stuff? People are just gonna be like, they'll just run you over, right? So where we could buy stock and what they try to do is they try to IPO the stock to individual investors
Okay.
who there's information asymmetry there as well, which means that the people that are inside have way more information, the investment bankers have way more information, and the institutions have way more information as well. And that's normally why you see the stock kind of drift lower over a 3 to 5 month period of time. But it would be interesting to see what happens here, because again, if there's an expectation that it's going to go into an index at some period of time after it IPOs, well, then maybe there's a floor there where there's going to be natural demand for people that actually understand how some of this stuff works, because trading desks across Wall Street, both in the United States and globally, will understand how this works. And that's where kind of the back and forth, the supply and demand dynamics really come into play.
Okay.
Yeah.
So maybe we do a special live, Michael, on the day of the IPO. We stay live all day and then we comment.
Just do like market commentary.
Market commentary, because that would be super interesting, right? That would be super interesting. At the day that the IPO, maybe we try. If you are interested, put a comment below, and maybe we do that to explain like how all of this thing works.
I think 98% of the people that individual stock buyers, like retail investors, have no idea what's going on inclusion day and what's going on when it IPOs.
Oh, for sure.
Yeah.
Like, but how would we know, right? Like how?
No idea.
How
No idea.
would we know? There's nobody who explained to us, right? Like there's nobody who is explained to you how this thing works. But so
they don't want you to know, to be fair.
Yeah, probably. But so and maybe actually that's part of my part of the answer to my next question, Michael. Why would this company want to IPO? Like, why are we talking so much about the IPO?
So it's a really good question. Becoming a public company is actually really difficult.
Yeah.
From a reporting perspective.
Exactly.
You have to do all this reporting that you didn't have to do as a private company. But they do it for liquidity.
But they can't get liquidity another way. It doesn't look like they have any problem to raise funds.
Well, what's the exit though, Martin, right? This is the key thing you have to understand is what's the exit for the people that have already invested in it.
Okay.
Because at some point when SpaceX is a $1.75 trillion company, there is no more demand left in the private market unless they believe that there's going to be an IPO. They want to sell it to individual and retail investors because that's how they get to monetize it. At this point, it's just a valuation. And sure, again, if you invested it, during its early stages, again, when it's like a $1 billion or a $5 billion company, you can take some of the stock that you have and sell it in the secondary market to other people that want to buy it before, not even just before the IPO, but like before Series B or Series C or Series D. And there's nothing stopping a venture investor from selling as much of the stock as they want, actually, into those rounds of funding.
Okay.
So they can monetize it that way. But if you strongly believe that that the exit is either going to be an acquisition by another company in your sector or close to your sector, or an initial public offering at a much higher price. Because here's the thing. In general, there aren't investment bankers involved in like Series C or Series D.
They aren't, right? They are not.
No, they're not. They're not. Because it's not really necessary. I mean, it depends on the company for sure.
Okay.
But except for Google, I don't know any company that's ever done an IPO of any significance that didn't have an investment banker or an investment banking team or a syndicate involved in actually taking a company public. What is the investment banker's responsibility? Well, they go out and they do a roadshow to other institutional investors that have not been involved in the private market investing.
Okay.
And the second thing they do is they go to retail investors, which means individual investors like you and me and our grandparents and stuff like that, who are high net worth or whatever, participate in IPOs and say, on the day, like you can buy at whatever the IPO price is, which is predetermined.
Okay.
And then everybody who was in gets a chance to, but you will know beforehand, like which of the private investors are selling their stock.
Okay.
Which is also a little bit of a tell.
Okay.
Do you know what I mean?
Yeah, yeah, for sure, for sure, for sure. You can probably learn a lot of things from that. Yeah.
Yeah, because look, if the founders of the company are selling all their stock on the IPO,
Yeah.
you're
Exactly.
just like, really, all of it? Why am I buying it then?
Yeah. Okay. So do you feel like that's part of his campaign? That's part of the roadshow that you just mentioned? Like,
For sure, for sure, for
yeah.
sure. But also, like, I think SpaceX is actually a really interesting example here.
Hmm.
Okay, people have heard of SpaceX, but do you think everybody knows that SpaceX merged with like
Yeah.
XAI?
People outside of the bubble, right? Like people who
They
are
have
not
no
like,
idea. Like again,
yeah, 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 yeah.
if you ask your mom or your sister or whatever, like they would have no idea. They've definitely heard of SpaceX because it's Elon Musk and he's very he's loud. Yeah,
Yeah. That's a good choice of word.
but one of the things that they're selling here is that there's a huge opportunity for XAI in the context of SpaceX as well to create more value,
Hmm. Hmm.
right? And that's why it's weird because they're calling the company SpaceX, but it has this XAI component to it.
Yeah.
And that's it. Because if you look at the other names, it's SpaceX, which feels like a space company,
Hmm.
and
Hmm.
then Anthropic and OpenAI.
Yeah.
So
That's
it's
true.
really what they're trying to say here is that it's three kind of AI companies,
Hmm. Hmm. Hmm.
and a space company appended on to one of them.
Yep. But the space company that really built Starlink, right? Like, and this is like as we discussed the last time, that's like the money making product inside all of that, right? Like
Yeah, yeah,
they are making a lot of money with Starlink. It's a really good infrastructure that they are building as well. They want to do like all the investment for space to build like all the AI capacity, right, in the satellite. So it made sense in a way, right? But like AI and SpaceX merge together if SpaceX become the infrastructure layer for the AI, basically, right? So,
exactly.
but yeah, as you said, like we are talking about AI here, right? Like that's
Yeah,
the
yeah.
AI, that's like the AI theme across the three companies for sure, for sure, for sure.
And another thing to consider, right? We just talked a little bit specifically about SpaceX, but if you look at what's been happening just over the past month or so
Hmm.
with OpenAI and with Anthropic,
Hmm.
there's kind of a little bit of a narrative risk here as well. Because if we talked about this like 3 months ago or 4 months ago, we would have just been like, OpenAI is definitely winning this game.
Hmm. Hmm. Hmm.
And this
Yeah.
is also before these articles about Sam Altman came out. And because most people have short term memories, right? Like just they forgot about the stuff that happened with the board and how we almost got kicked out of the company or did get kicked out of the company for like a day, right?
Yeah. Yep. 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 Yep.
But
Yep.
you probably forgot about it. I know I did.
Hmm. Hmm. Hmm.
So the narrative here is can be really strong as well. But the narrative, what's the right word that I'm looking for? Slippage, yeah,
Hmm. Hmm. Hmm.
in the private markets can be really strong, which means that the swings in valuations in the private markets can be really, really big
Yeah.
and really fast because you see
Hmm.
people
Yeah.
literally just like clamoring,
Hmm.
fighting hard to like just call Anthropic and go, just tell me some stock
Yeah.
at any price, and we'll get to it in our next story, right? But
Yeah.
that's what's apparently going on with Anthropic's valuation, but it's not happening in a vacuum. It's happening against OpenAI,
Hmm. Hmm. Hmm.
right? Because people are going like, I don't want to be in this anymore, and if I am in it, I want to have something that's going to give me what they believe is more prolonged upside.
Yes. And so at a higher level, right, I see that like from like a potential buyer standpoint, right? Like or a potential employee of Anthropic or OpenAI who has some stock, right?
Mm.
And when you see all of these big numbers are like, hey, SpaceX could, like IPO at 1.7 trillion and all of that, right? So it can that give you an idea of the number like that your shares could be worth,
Could be
right?
worth.
Like because like outside of the funding round, like for example for Anthropic, they raised at $300 billion valuation, so that gives you
Yep.
like the official number, I would say. But since then, they grew so much that like you don't really know how much is it, right? So all of this talk about okay, Anthropic can be worth 800 billion,
Yeah.
can be worth a $1 trillion. Like all of a sudden, the secondary market gets crazier about it, right? And so then you
Yeah.
want an even larger number on the IPO to actually fuel the fire as well on the secondary market to make people want to buy or want to invest because you give them such a large number number on the IPO that you feel like you're going to make money, right?
Yeah,
And then if you include like retail investors into that, we don't really understand like all of these dynamics. But if you say, hey, SpaceX is going to IPO at 1.7 trillion, we see that all around the news, and I can buy, some secondary market shares lower than that, it feels like you are going to make money, right? And so
exactly.
maybe there's a bit of that as well of like, okay, we want to, I don't know, do something on the secondary market or like, yeah, fuel the fire somewhere.
So it also, and you hinted at this, and we'll talk about this when we get to Deepseek as well, right? But like,
Mhm.
it's also important for employee retention.
Yep, yep,
And the story that I like to reference is old. I want to just give me a second.
sure. Take your time, but yeah, definitely like this main story, then the Anthropic just after, and then
Yeah,
the last one about Deepseek. They are
exactly.
definitely
We'll get
related
to
to
it.
each other.
I wanted to get the date right here. I was going to say the right thing, but in August of 2019, Tumblr
Okay,
was acquired
by WordPress,
by
right?
Sagan.
WordPress.
Well, no. So actually, let me do
Okay,
this again.
sorry.
Tumblr was first acquired for $1.1 billion, I believe, and I don't remember the date. I can't see it. But the first developer that was hired to do this was a guy named Marco Arment.
Okay,
And Marco became famous for a bunch of different reasons. But like when he was the first developer hired to do this.
okay.
And I don't know why I have this number stuck in my head, but he literally like wrote most of the code because the guy that founded the company, David Karp, I don't believe was a technologist per se or wrote code. But anyway, I believe Marco owned 5% of the company when it went public at when it got acquired at $1 billion.
Hmm.
And Marco, who's a very good coder and does some other really interesting stuff and is like very thoughtful about like technology because he's had a podcast for a long time with a couple of his buddies. But the point is that like when it got acquired, he was as surprised as anybody that now we
Hmm.
had like life-changing money.
I see.
Do you know what I mean? He
I
was like,
see. Yeah.
now what do I do? Like in a way, if you heard him talk when the company first got acquired, he was like afraid
Mm.
because he went from being like a guy with a podcast who talked about Apple and technology to a guy with like $50 million.
Yeah. And
Right?
especially if there were no valuation before, no hint at how big the number was, right? Like you can be super surprised for sure.
Yeah, but Martin, like and this was almost 10 years ago, right? But like your life changes dramatically when people think you have a ton of money,
For sure.
right? Because now everybody and their brother wants to sell you something, get a piece of it, and like take some of your money or manage your money for you or have you invest in their company and blah, blah, blah. And he was like, I don't need any of this crap.
Yeah. You're right. You're right.
But
You're
if you
right.
think about it, what it means like and remember, that's $1 billion. Now we're talking about companies potentially going public at $1 trillion, right?
Yeah,
So
that's true.
you get $50 million turning into what, 100 times higher?
Yeah. Yeah,
That's
because like
$5 billion.
when you start, like when you are one of the first developer at Anthropic, for example, right? Then you tell your mom, look, I got like 0.1% of stock, right? It's so cool, right?
Right, and she's like,
And then
get a
then your
job.
mom remembers, then
Exactly.
when the company IPOs at $1 trillion, your mom remember like, hey, did you tell me that you own like 0.1% of the company like 4 years ago, right? Okay, so zero
It's
point 1
$200 million now.
right?
Yeah.
So you're right. Like you can be like I mean that's good for them, right? Like that's really amazing. But it's true that yeah, I mean that's great for them.
Yeah. When we get that rich, I don't want anybody else to know about it. Do you know what I mean? It's just a pain in the butt.
The problem actually is we are going to make money for sponsorship, and that's going to be visible.
Everybody's
Like,
gonna know. Let's not talk about it. Maybe we
we do secret sponsorship. We don't tell anyone about our sponsorship.
exactly. Okay, let's move on to the next topic, right?
Let's move on to the next topic.
So there was a lot. Do you want to do this? Or you want me to start?
So yeah, we can do it together. But actually, like, this is really related to the first story, right?
It really is. It segues nicely. Yeah.
Yeah, it segues very nicely. The idea is that Anthropic's valuation has hit $1 trillion on the secondary market. And the reason why that's a big story is that it's the first time that it overtook OpenAI. So now on the secondary market, Anthropic is worth more than OpenAI.
Right.
So this figure of like $1 trillion appears on Forge Global. So that's one of the leading private share exchange. So that's really important to know that it's not like a official number, right? Like there is no fundraise at this price. There is nobody who I don't know bought like a big chunk of Anthropic at this price. No, it's just like on the secondary market on this one platform, Forge Global, the price of Anthropic was $1 trillion. Like the total value of the company, it's $1 trillion
Yeah.
above OpenAI.
Right. But
Um, yeah,
can we
go
make the
ahead.
point, Martin, though, that they actually did have a Series G funding round at a $380
Yep,
billion post-money valuation on February 12th,
yep.
2026, not 2025. We're in April.
Yeah, 2 months ago, right?
Almost 2 and a bit months ago. But yeah, let's just call
Yeah,
it 2 months, not to be too pedantic about it. And it's not three times higher because it's 380 billion, but it's
yeah,
like it's fundamentally around three times higher.
yep.
And nothing's really changed that dramatically, except what?
So they launched new product. They launched Mythos. They have announced, their 30 billion also like annual recurring revenue. What was like a huge increase from December 2025. That was at 999 billion. Um, and then we had like all the news as well that we discussed as well, of all the investors willing to invest into Anthropic at a $800 billion valuation. You remember? Like
Mm.
we talked about that last week. Like apparently so many investors want to invest into Anthropic and they say no, they don't want to do it yet. And so like all of this news, all of this information actually definitely, fuels the fire here on the secondary markets.
Yeah, but also think about like what is a stock market at its core? It's a predictive mechanism, right?
Yeah,
It's trying to predict forward earnings, but also forward price
yeah,
activity.
yeah.
So something for it to move this much in, let's just call it 2.5 months or whatever, right?
Mm.
Something more fundamental has had to change rather than just saying that they have $30 billion of annualized revenue of ARR, right,
Mm.
on an annual basis. But the one big thing that has changed is that people have lost faith. Like, here's the thing: we talked about this a couple of days ago, or a couple of weeks ago, where we said like 80% of their business comes from their business customers, and that they have 300,000 business customers. But OpenAI has 1 million. But the narrative around it has changed drastically.
Drastically in the last 2 months. It's insane, right?
It's
Like
insane, right?
the
Because
narrative,
yeah,
yeah.
because
Mm.
because that article, right, that came out, it was in the New Yorker magazine
Yeah.
by Ronan Farrow and oh god, Adam Morantz, I think is what the guy's name is. I have to remember this. It
Hmm.
just
Hmm.
shined this really terrible light on OpenAI, and not on OpenAI, on
Sam
Sam
Altman.
Altman.
Mm.
But you can't separate Sam Altman from OpenAI.
Yeah, yeah, no, no, no.
This is part of the problem, right? Like if you had found out that like Steve Jobs was like, killing babies in his backyard, the valuation of Apple would have plummeted, right?
Yep, yep. And it would be fired and bye bye,
You'd be
basically.
fighting bye bye. But people are making a choice here.
Yeah.
They're doing a little bit of substitution because the
Hmm.
Anthropic business looks a lot like the OpenAI business. It just feels more well managed, more targeted,
Hmm. Hmm.
more serious in a way, and there's no scandal around it yet.
Yep. Yep, 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 yep.
But this is what we meant when we talked in our first segment about how the narrative can actually be more powerful than the numbers in some cases. Because people are looking for clarity, but they're also looking for predictability in businesses.
Hmm.
And it's getting hard to understand like what the predictive story is around OpenAI.
Yes, it's
You
true.
know exactly what Anthropic is. You know
Yeah.
what it is. It
Hmm.
does
Hmm.
this, but OpenAI, like they could start doing like dairy farming next week, and people would be like, "That makes sense." Do you know what I mean? Because
It's true.
because they also bought like what did they? But they bought something else recently, not besides TBPN.
Like we talked about Hero Finance last week.
Yeah,
You
Hero
remember?
Finance. Yeah. That's the
They
thing I was talking
they
about.
bought it and they shut it down, right? So really weird acquisition. They didn't, did too much announcement. They didn't really say anything about it. But also, actually I actually imagine that we didn't speak about it. But um, OpenAI bought OpenCloud 2 months ago, February 14th, right? Like very easy
Yeah,
to
but see,
to
but see,
remember.
but this is the thing. I
Yeah,
completely forgot. Like I should know that off the top
yeah,
of my head.
yeah,
But you know
but
why I
so
forgot about it? Because what did they do with it?
because what do you do? And it's actually even worse than that. Like we didn't cover this news about it was not one of the most important, and we were really busy at the event. But they are deploying like all of their agentic stuff inside of Codex, and they're doing more and more features inside of ChatGPT, inside of Codex that are actually normally the work of OpenClaw.
Right.
So to
The
your
orchestration layer.
point,
They're building the
yeah,
orchestration layer into ChatGPT, right?
into ChatGPT, into
Yeah.
Codex,
Yep.
it's you really wonder like what's the direction. Like there is no real yet. It looks like it's completely like yeah, it's disorganized. There's not like one main narrative, right? And all of this example, for example, I think OpenClaw to me is the most striking, right? Like when you buy OpenClaw, or actually you buy that you hire Peter Steinberger, that's the official narrative, right? You hire him, and then you
Exactly.
rebuild the exact features of OpenClaw inside something else, where Peter doesn't look to be involved, right? Because he looks he's involved into OpenClaw. That's weird to me, right? That's really weird. And on
Very
the
strange.
on the on the opposite side, you have Anthropic, where yeah, it's clear, right? It's really really clear. Like what they're doing is coherent. That's what I was looking for.
Yeah.
It
Yeah.
looks completely incoherent what they are doing at OpenAI, where at Anthropic it looks really coherent. It makes sense. They and yeah, and so $1 trillion valuation on the secondary market, mind you.
Yeah. So it's going to be interesting to keep watching this, right? Because
Yeah.
that valuation, I feel like, is not going to go away
Hmm.
soon, right? And the idea that, excuse me, that Anthropic is going to continue to be better managed
Hmm.
than OpenAI. And there's a real question in my mind, and you and I have spoken about this offline. Like, is it sustainable for Sam Altman to still be the CEO and the head of that business? Right? Because what was the name of that energy company, Helion Energy, where he tried to get them to,
Helion, yeah, yeah.
right, to buy? Like, so there's a lot of stuff going on there.
And there's multiple example also like of companies where Sam Altman is actually either actually is an investor, right? Like he invested his own personal money, and he tried to get OpenAI as a client, or OpenAI to acquire the company, or OpenAI to invest into that company, right? So there's like this huge conflict of interest, ongoing conflict of interest, that is going on. Yeah, but look, like also like I was thinking about that, like there were no new bad article about Sam Altman this week. It's
I
been a
like how you're
while.
I like how you're surprised. Like, why?
Yeah, I mean
Nobody.
it's been
Well,
month. I mean maybe at least a month. But every week there's one or two really bad article about him. This week none, zero,
yeah. I mean, the
zero.
news cycle in the United States is just so fast right now, right?
Yeah, it's really really fast. But
Yeah.
maybe they are slowing down. Maybe they tried something and it did not work, right? And now they're just going to do something else. I don't know, but yeah, it's been a few days, and we were not used to it. in,
Exactly.
in the last couple of weeks, there has been a lot of stuff, and now it looks like it's calming down, which is good for him personally.
It is good for him personally, but I do
Yeah,
think that there's some lingering thought process out there that says, like, is he actually going to be? Is it sustainable for him to maintain his position as the leader of
yeah,
OpenAI?
yep, yep,
Yeah.
yep, 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 yep. Especially as AI gets more important, right? More mainstream as well, right? It's really complicated to have my parents be like, okay, like we use AI that is managed by this guy, right? So it's going to be complicated, yeah, for sure.
Yeah, and there are also stories out there about how OpenAI is, I wouldn't say strong arming, but they're
Hmm.
leaning on their global consultancy partners, right, to scale Codex adoption in large companies. Like you know
Yeah.
what I mean? Like where they're paying them to encourage them to encourage their clients
Hmm.
to use Codex as opposed to using Claude Code.
Hmm. Hmm.
I think the biggest benefit that Codex has is it's just easier to pronounce. Um,
And it doesn't sound like a
a
grandfather
grandfather.
name in French.
It doesn't like your grandfather in France. But the other thing too, Martin, is just again, just to get back to the relevance of all this stuff is,
Mhm.
we did like almost 50 recordings at this event we were talking about
Yeah,
before, right?
yeah,
And almost all of them in some way segued into how are you using artificial intelligence in
mhm,
your business to make it better? How are you considering it? And
yeah,
where are you getting your information about it, right?
It's true.
And even in Asia, people are still talking about what's happening with OpenAI and with Claude.
Yep. Yep.
So that's not going to go away.
Nope, it's not going to go away. But I'm really curious to see like how this is going to evolve, right? If they do IPO, because they are talking right about like about doing an IPO at
Mm,
Anthropic. That's TechCrunch that reports it.
mm, mm,
That like they are yeah, they targeted an IPO for October 2026 with Goldman Sachs and JP Morgan advising at a probably like 400 or 500 billion-dollar valuation, which seems so low right now, right? Like when I see this number,
yeah.
like if they are for real investors who are okay to invest at a $800 billion valuation, why would IPO at 4 or 500, right? Like
Well, a lot of people would lose a lot of money, right?
a lot of people would lose a lot of money, right? So that's why like you wouldn't do that. Then in TechCrunch they say that positive free cash flow is projected by 2027. I think there is no way, Michael. There is no way. If they do have free cash flow in 2027, it means that they are not growing fast enough,
No.
which is never going to happen. Never going to happen. Right now they need to build data centers, they need to build chips, they have tons of stuff. No way they are going to stop investing. They can't be free cash flow in 2027. It's
So
impossible.
again, just as a cautionary tale with this like overinvestment theme, right? Because it
Yeah.
feels like that today, right? Like you said, they're going to invest $122 billion a year, $600 million over what, a 5-year period of time.
Yep.
I just want people to go back and think about Amazon as well.
Exactly. Yeah. I was thinking about them. I was thinking about them.
Yeah, but you have to remember because there are some specific things that I can't forget about, and one of them was, when Amazon started increasing its product line from just selling books and selling
Mhm.
CDs to selling like bigger items like television sets and stereos and other kinds of consumer electronics. I think we've talked about this before, but just to put a finer point on it, they also had always said that they were going to be an asset-light company, right? Like they didn't own any of the
Mhm.
things that they were selling. They were kind of brokering it from like whoever the supplier was to their buyers.
Yeah.
But what ended up happening was that the delivery time started expanding because the demand for products and the demand for just e-commerce as a thing started growing so fast. So they had to change their methodology for doing this.
Mhm.
And then they started building, it's not a data center, but they started building warehouses
Mhm. Mhm.
in strategic locations, which changed the entire cost calculus for what they
Yeah.
were doing. Because before they just used other people's warehouses. They'd go into
Mhm.
somebody else's
Mhm.
warehouse, pick up an iPhone or pick up a book or whatever it was, and then deliver it to somebody. But that could take 3 or 4 days.
Yep.
But then they wanted to do once it came down to like same day delivery or 2 day delivery or whatever it was. They were like, we can guarantee this delivery. They had to start building their own warehouses,
Mhm. Mhm.
and they spent years investing money.
Mhm. Mhm.
And I think at some level, it's going to be the same for these AI companies. They're going to invest heavily, very front loaded investment at the beginning.
Mhm.
And the companies that can withstand or sustain that investment and come out the other side, even with a small profit or even just like better cash flow, is the one that's going to win, because that's exactly what Amazon did to the rest of the potential e-commerce
Yeah.
competitors back in the day.
Yep.
And even though the numbers are bigger today,
Mhm.
and the usefulness of AI is different,
Mhm.
from an investment standpoint, it's the same story.
I feel very similar, right? And I always like remember, this narrative of just Amazon like
Yeah, yeah.
making a lot of money, basically being profitable. The business works, but they choose to invest so much into growth, into into warehouses, into
Yep.
building all of this infrastructure,
Yep.
that at the end the bottom line is negative, right? But if they
Yeah.
say, okay, we just stop growing, then the business is profitable. And so then it's basically a choice, right? Like to not be
Yep.
profitable. And I don't see like how Anthropic or OpenAI can do something different. They're just doing
No,
the exact same thing, right?
no,
They
they
are
can't.
like, if tomorrow they are profitable, it means they are not
They're
growing
not
quick
investing
enough.
enough. Yeah, exactly.
Yeah,
Like it's a bad sign. And this is one of
it's
the
a really
things that
bad
Jeff
sign.
Bezos
Yeah,
tried to explain to people back in the day. He
yeah,
was like, I could be profitable tomorrow. And a lot of
yeah,
people laughed at him. He's like, I could be super profitable tomorrow, but then I'd stop investing in my company. Which one do you
yeah,
want?
yeah. Exactly.
Yeah.
And that would make no sense, right? Like we
No,
wouldn't have like such a huge Amazon today if
no.
he was actually profitable so fast, right?
Exactly.
So that's why, like, I don't think Anthropic and OpenAI want to be profitable at all. This is not the play at
No,
all,
no,
right?
no, no, no. Not
This
today, for sure. Not today.
not today for sure. There's way too much stuff to build, and plus, like, now that there's like two very big companies who are competing with each other, that makes the investment even more important, right? Like, we
Yeah, yeah.
really have to invest. So that's why, like, is it possible to go on a multi-year? Like, actually, when did Amazon IPO? Did Amazon IPO and then lost a lot of money
Yeah,
for a lot of
yeah,
years?
yeah, yeah,
Okay,
yeah,
okay, okay. So that works. That's fine. Okay.
yeah,
Perfect. Okay.
yeah,
That's the only thing I wanted to know. Yes. The answer is yes. Perfect. So that works.
yeah.
We do
The
it.
strategy worked for Amazon. Now they're one of the most powerful companies in the world, right?
Yes. Yes. Yes.
They're
Yes. And
part of
so
this
that's
magnificent seven that we were talking about at the beginning of this
yep. 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 And so
at
that's
this
okay to
thing.
be a public company, to have no profit, and to do that for years. No problem.
Again, just remember, what is the purpose of a stock market? It's
Predict.
liquidity, and
Yeah.
it's a predictive mechanism for where it was going to go. And if you had predicted that Amazon was going to be a super profitable company and that the price was going to be higher tomorrow than it was today,
Mhm.
you were right, and the predictions worked
Okay. Okay.
from
Okay.
a
Okay. Okay.
market perspective.
Okay. 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 Yeah.
Yeah.
Yeah. You're right. Okay. That
Okay.
makes sense. Then I think we're gonna do the same thing.
But again, it depends how long can you take the pain,
Yeah.
right? Before
But what?
people give up on you.
But well, I mean, if it's the same Amazon story as where the core business is profitable, then like you can stop the pain anytime, right? So then I
But that's the
think
key thing is, when do
it
you
makes
stop the
sense.
pain?
Yeah. So
That's the strategic decision you have to make,
yeah.
is when you decide when you're going to stop the pain. Because if you stop
Hmm.
too late, then maybe you'll never get the chance to be profitable, because other people will take their money away from you,
Hmm. Hmm. Hmm.
and that'll become fatal. Or if you do too early, then maybe you're not investing enough money in your own company. So then other people are out investing you, and that becomes fatal as well. So it's a very fine line you're walking. Yeah.
Yeah, you're right. And plus, if there is two competitors, was there a large big competitor to Amazon when they were doing that? Like somebody serious, like as big as OpenAI against Anthropic?
I don't remember that being the case, not in the United States.
Mm.
But again, it was so, e-commerce was a weird thing back then, right?
Mm-hmm.
And it was almost like no one's going to do that. And even today, like,
Okay.
I forget what the number is.
But like e-commerce is like only 10 or 15% of retail. It's like still super, super small compared to retail sales. But
Yeah, I just want to see what that number is, right?
mhm. But I don't
I'm looking,
remember
I
like
can't find it, but go ahead.
yeah, I don't remember like another player. I don't remember. So also like I was much younger and I was in France. In France, I try to remember, like I think Amazon was pretty early and they were like the only one. There's like some French local marketplaces, but really, really far from the scale of Amazon.
Yeah, yeah.
Yeah.
You were right, Martin.
Yeah.
16.4% of total retail sales in the United States is
In
e-commerce.
e-commerce, yeah, it's pretty tiny compared
It is.
to overall sales. I mean, it's not zero, right?
No.
But what, in 20 years, right? But
Yep.
Amazon made more than that. They were started before 2000, right? It's
1998 or something, I think it
yeah,
was, but
something like
yeah.
that. So it's like 26, 27 years now. So it's only 16% market share of total retail, right? So it's still pretty small.
Oh
And I
my
do
God.
think
Amazon was founded in July 1994,
1994. Okay,
but it wasn't
that's
called Amazon at the time. It was called Cadabra,
okay, okay.
from abracadabra, like
Oh,
magic. Yeah.
really?
From magic. Yeah.
But I mean, that's a visionary idea, right? Like to say, okay, look, like you are going to pay online and we are going to deliver it to you in 3 days. Whoa, that's true, right?
One click purchase. I was joking with somebody about this today. Like, the biggest innovation that Amazon ever had was like one click to purchase. Anyway, okay. Let's talk about Mythos. Do you want to do
Let's
this?
let's talk about our next story of the day. After all of this talk, Michael, about Project Glasswind, like
Yeah.
Mythos is too hard to, sorry, it's too scary
Too
to,
dangerous.
too dangerous to release. We cannot give it to everyone. We need to, gate it behind closed door to only a really, really
Dark as well.
selected.
Not just behind closed doors. It's in the dark too.
Yeah, true. It's like we can only give it to like a very selected group
Mm-mm.
of companies, like after like all of this talk and all of these things, right?
Yep.
Um, Within hours of the public announcement of Mythos,
Tell me.
an unauthorized group got it anyway. Some people got access to Mythos by guessing the model's URL based on Anthropic's known naming convention.
Wait
So
a second. Just
basically,
I heard what you said, but can you just say that again so people that
yep,
may not have heard it can actually hear it?
yep. So when we do the API call, basically to call Opus 4.7 or to call Sony, okay. So the way it works is that you have like an Anthropic URL. So I don't remember on top of my head, but think about like api.anthropic.com slash Sony 4.7.
Yeah, yeah, yeah.
Okay.
Yep.
And so that's the URL. And so basically, if Sony is Sony 4.6, if Opus is Opus 4.7, then you try Mythos 1.1.
Or 5.0.
Mythos,
Maybe it's just
yeah,
this Claude,
exactly,
code
right?
4 5.0.
Yeah, so they just use the same structure of the URL in the API, basically, and they just guessed it this way. And so
That
this
is
is
the dumbest thing I've ever heard.
so, but that was not only that, because they also used a credential that they stole from a third-party contractor
Yeah.
who works with Anthropic. So actually, this group who did that, they operate through a private Discord server, and they are dedicated to hunting unreleased AI models. So that's what they do all the time. They look for unreleased AI models, and they just try to get access to it. And the crazy thing is that they gave Bloomberg, so Bloomberg has the information, they gave them screenshots and a live demo as a proof of using Mimifo's model. So
So this
pretty
is so funny,
wild.
right? So, but essentially, they went out. Just think about this: how it works internally at Anthropic.
Yeah, yeah,
Right? Some dude who's in charge of releasing this goes to like Dario and just goes, "Okay, look, what should we do for the naming convention? This so we can just keep it super secret, right? So nobody knows about it." And Dario's like, "Ah, just keep it the same name, because no one's gonna know, right? They'll never figure this out. No one's gonna guess this." So the guy goes back to his desk and just like does the regular thing, right? Maybe it's like Mythos, like you said, like
yeah.
api.anthropic.com slash
Mythos
Mythos 1.0
1.1.
or 0.9 or
Exactly.
something, right? He goes, okay, I
Exactly.
did it. You know that guy's getting yelled at like a maniac by Dario right now.
But that was only like the first half of the access, right? Like
Go
you
ahead.
you get to get the API access, but you also need to have the credential, right? So
Oh, right,
that's
right,
where
right.
like the third party vendor that they actually act, I guess. I don't know, like there's no information about like how they did that,
Mm-mm.
but they didn't get it the proper way, let's say, right? Like they shouldn't have access to it. Yeah.
So you must, in my head, I'm just thinking like these guys, it's not the first time these guys probably have early access to Anthropic's
Yeah.
models, right?
Yeah.
But in the
So
previous releases for the models, it didn't matter that much.
yeah.
Because remember, the release time between 4.6 and 4.7, it feels like it was like 12 minutes, right? You talked about this a lot because you said this was just like a
But
bug update.
a fix probably to
Yeah,
4.6.
right. So they've probably had credentials already,
Mhm.
but it
Okay,
just
I see what
wasn't
you mean.
important enough to know about, right? So
Oh,
once they figured out what once they figured out what the URL was, like, let's try our existing credentials, maybe, or maybe they had figured out a way to
that
get
that makes
credentials from
sense.
somebody else, or maybe they just paid somebody off.
That made ton of sense. Yeah, because they got it within hours, right? So which means like
Yeah, yeah.
they were ready for it, right? So you're right. Like I think the most likely thing is that they already had the access, or they knew someone who had the access, and so they could get it super quick, basically, right? Like there were no like research and no attack, nothing. Like they just knew how to get that, and then they just tried the API URL and it worked. They were like, oh, that's cool.
So can I tell you another story, and then I'll relate it to this? Yeah.
Yeah, tell me.
When I first joined Morgan Stanley back in 1987,
Okay.
if you stayed past like 6 or 7 o'clock at night, they would give you a little receipt that you could use to go to a restaurant, and you could expense your dinner.
Okay.
Okay. So one of the guys in accounts payable had
Okay.
that little, because you had to go down to accounts payable and get like that little form,
Okay.
and you just like tore it off in order, right? And I took one, like my buddy took, like, it would just be in order, like 001, 002, 003.
Okay.
You'll see where this is going in a second. I think it was like in 1988 or 1999, they fired the guy in accounts payable because he basically like took one of those pads
Okay.
in order and just filled them out without going out to any restaurant. Just said, and he wrote down the same restaurant name. So it was like 001, 002, 003, 004. And people were just like, you went out every night to the same restaurant around the same amount of money in order.
And only you. There's
And
no
only
no one
you
else.
use it. You're fired. Do you know what I mean? Like, because he was just stealing money because he was getting reimbursed for it for money he didn't spend.
Ah, la, 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 la.
But again, the point was that there was a methodology in place and maybe there was some sort of ordering around it. But imagine a situation where, like, I can't imagine a world, Martin, where Anthropic gives 50 companies, access to Mythos. And inside that company, there's not one guy or one gal that knows somebody and that knows the credentials that he got, that his buddy got, and maybe there's a pattern there as well. That's why I talked about this pattern. It's simplistic back in 1988, but maybe not so simplistic now, but maybe there's a pattern for this access. And, they just went to their buddy on the weekend. It was like, okay, this is coming out next week. And here's the access we're going to use. And here's the access Bob's going to use. You know what I mean? Like use one of these keys or figuring out some way to get it to them without doing it electronically. I don't know exactly what the method is, but you understand, like when humans are involved, there's always a chance for leakage. Yeah.
And that's like, I mean, that's always what we hear, like, is what is the most critical point for any security attack,
Yeah,
right?
somebody internal.
People believe in the cybersecurity attack is they found a back door, they found a way in, or all these things. No. Most of the time, they just need to send an email asking for the access, and they get it, right?
Right? Someone's
So
like, oh my God, we didn't give Jim access yet.
Exactly. And so, of course, that is a little bit more elaborate than that, right? It's not like an email, hey, I am the hacker, I want to hack your system, please give me access. No, that's not what they say, right? They say, hey, I am the CEO of a company, you need to send me money. That's a little bit more elaborate than that. But very, very often it's a human who just give the access because they have been what was the word, duped. That
So
was the
yeah,
word,
so
right?
imagine this, Martin. You make a really good point. Social engineering is like the biggest way that hacking happens in some
That's the number one
cases,
way,
right?
yeah. But the number one
So
way,
imagine if I have the URL, right, which I shouldn't have,
yeah.
and I call like the help desk at Anthropic, and I'm like, dude, I need to
Exactly.
get in to test this thing.
Exactly.
Can you
Exactly
please
that,
reset my password?
yeah. Yeah.
Come on,
And
dude, just do it.
yeah, exactly.
I
Like
have
I
the
am
URL. You can
from
see it. I have the URL.
Amazon. Yeah, exactly. I'm Bob from Amazon. Like we were on the call with the engineer 2 hours ago. Can I talk to Peter? Or Peter's
Right.
gone.
It's like,
Oh no, I forgot the password. Peter didn't give it to
he's
me.
gonna kill me. My boss is
Can,
gonna kill me.
exactly. My boss is going to kill me. You really need to send it to me. Okay, sure. And boom, done. Right.
Yeah.
And that's how it works, right? Like that's how
Yeah.
cyber attacks work, right? It's much more about social engineering. And you are right. Like maybe this is that I think this is way more likely that it happened this way, right? They were super prepared. They knew exactly what to do. They guessed the URL, and then boom, they knew how to access it.
Yeah.
Super easy. But Anthropic confirmed, right? So that's a big deal, right? Like Anthropic said, yeah, that's true. There was unauthorized access to cloud Mythos through one of our third-party vendor environments.
Right.
They said that they found no evidence that their own system were compromised. Okay, but I mean, we are going through vendor onboarding, right, Michael? Like with our with our clients. Um, we don't have this type of access. Like it's really hard, like, to have access to previews and to like database accesses and all of this stuff, right? Like they that I wouldn't say they do background check on us, but it's close to that, right? Like
Yeah.
it's really close to that. It's really hard. Like when you want to
It
build,
takes time too.
yeah, it takes a lot of time as well. So
Mm.
like this, like when they say if one of our third-party vendor got compromised, it's not just what Bob who delivers the pizza like did something wrong. No. There's a vetting process. There is like a lot of information that you
Yeah.
have to submit to be a vendor to this type of companies. So if there's a breach there, there's also a breach in your onboarding process, right? And there's something wrong somewhere that made this possible. Someone had too much access. Someone got
Yeah.
access to the wrong thing that he shouldn't have, right? So
Yep.
it's not only like that's our vendor that got compromised. No, no, no. It's the entire onboarding flow that's wrong somewhere, and that led to that. Or
Has there
as
been
you say,
has there been any news of like negative impacts, or is this just a bunch of guys that wanted to show off that they had access that they shouldn't have?
so they say they were just interested in playing around with new models. That's it. They just said that. But that's interesting to me because Anthropic
Yeah.
is so good at marketing. To me, it looks like Anthropic marketing playbook exactly, right? Like
Yeah. Yeah. Yeah.
some dude got access to the models and they did something crazy with it, right? And so now we really can't give it to the world because people are going to do crazy things, and they didn't use it to their advantage. like like I don't know, maybe the Dario was tired that day, didn't think about this story, but that would have been like a crazy story, a very scary story, which would have been exactly the Anthropic playbook, right?
But is it even possible?
Yeah, tell
Can I
me,
introduce the possibility
tell me.
that it's not unauthorized access, but it's being sold as unauthorized access? You know what I mean? It's like we have this new candy and only
So
50 people get it, but they they gave it to somebody else and then they said go do a demo for Bloomberg so you can see so the rest of the world can see like how powerful and cool this thing is. But let's pretend like you're not supposed to have it.
So I think yes, if the guy were doing something with it, then in this case the headline would have been a guy, like a group has got access to Claude Mythos and they did something crazy with it, you know.
Yeah.
Then that would have been like a much stronger headline than
It
just
keeps
a
it in the
group of
news, right?
us. Sorry?
It keeps it in the news.
It keeps in the news. Okay, yeah, that's another. Yeah, maybe actually they tried, they leaked it,
Yeah.
as Anthropic love to do to these guys, and unfortunately, this guy couldn't do anything cool, and so and so
Some
the headline,
lame dude.
yeah, some lame dude, and so they got like removed from the Anthropic leak list, like they are not
That's
going
hilarious.
to get like leaked anyway. No, like we like for those who are watching us right now, we are just like making some fun of like potential scenarios, right?
Right.
But but yeah, the real story is that some people got access to Mythos and they shouldn't have to.
Got it. Okay, let's talk about Deepseek, Martin. Let's go on to our next topic because this is
Yeah,
actually kind of interesting as well, and it brings in sort of an international flavor,
exactly.
but it also hits on some pretty interesting points too. Do you want to start and I'll jump in?
Yes. So first of all, what are the facts? So Deepseek is seeking a $20 billion and maybe more valuation in his first ever external funding round. Okay, so Deepseek is actually a spin-off from a Chinese hedge fund called iFlyer, which they founded in 2023. And up until now, it has been entirely self-funded. The
Can I
founder,
jump in? Can I just jump
yeah,
in really quickly?
please, yeah,
So the market may remember that DeepSeek became globally prominent in January of 2025 because it released a very high performing, relatively low cost, open
yeah,
weight, open source model. But the point of like the surprise here was that a Chinese lab could compete with the top Western labs
mhm,
while spending very little money. The whole point here was like maybe you don't need $100 billion to do this.
yeah,
Yeah. Sorry, go ahead. And
yeah,
and now they're raising money. So go ahead.
yeah. So that was like the big headline at that time was like the DeepSeek was only trading with what, like $10 million, right? Like
Something like
something like
that.
this,
Yeah. It was a
and
tiny number.
it was like a really good model compared to the OpenAI and to the
Yeah.
Anthropic, who costed like billions and billions of dollars, right? So it was like, oh wow, we can actually do something with much less money, and that's really scary. Like how much market cap Michael was wiped like in one day on the day of the announcement of DeepSeek? Was it
Oh
like
my
one
God, billions
trillion
of dollars
dollar?
because everybody got nervous. So like, you can do this for $10 million. What are we
Yeah,
doing over here?
exactly. It was like a huge dip in the market, right? It's absolutely
Yeah, yeah,
crazy. But so here, the most interesting part is not really that they fundraise; it's more like why they want to fundraise, right?
yeah, yeah.
And so that's the twist. DeepSeek is not raising because it needs cash. They are good with that. The real goal is to establish a public market benchmark for its valuation. So then its employees actually know what their stock options are actually worth. Because without evaluation, because like up until now they've been able to just like invest by themselves, like they're just funded the whole thing on their own. So which means nobody really knows what's the value. And without anyone really like knowing the value, when they give stock option and when they give this type of thing to their employee, then at the end of the day, the employee have no idea what's the value of their stock option. They don't really understand the compensation package because there is no numbers for them, right? So
Yeah.
which means at the end of the day, Deepseek equity, they can't compete with the other one who are transparent, lucrative packages that they offer to their researchers, right?
It's really interesting, right?
Yeah, it's a really interesting solution to a problem, right? Where you are super successful, you don't need any funding, but then your people are actually asking you, well, actually, what is it worth, right? And now you need like a public number. So
So I think it's two things, actually.
yeah,
I think one of them is exactly what you're saying, that they need to have some sort of valuation so that their employees actually know what their stock
yeah,
is worth.
yeah,
That's the first thing. And I think that that's important, right? Because we talked about this employee retention is actually super important. We talked
yep,
about it in the context of OpenAI and Anthropic, and I don't
mhm,
think it's any different in China, to be fair.
yeah,
Because they're the flagship model in China. They're the most well-known one, but they're not the only known model.
no, not
But
yet.
but I think the other interesting side of this as well is that, and again, they're not raising billions and billions of dollars. They're raising at least 300 million was the story that I read, right? I don't know
Yeah,
if that's changed, but if they raise up to 300 million dollars, I think it's also a slight admission.
okay,
I think it's a slight admission on their part that like, right, because they don't have to raise money necessarily to prove like what the valuation is alone. That's not the only way to do it. But the other thing is, even if they don't need the money, they have to do two more things. One is prove that they can raise money
okay, yep,
from different people,
that's a good point. Yep,
right? From different people that outside investors actually have interest in this company and feel like it can be successful.
hmm
And the second thing is that it is a slight admission that while we are lower cost and open source, we're going to have parity, to have model parity or close to model parity with what's going on in the United States.
hmm
We're going to have to invest a little bit more money than we had thought.
Yeah, yeah. And when you look at the numbers that they are thinking to raise, right? Like they say they wanna raise like at least $300 million, but they don't want to sell more than 3% equity.
Right. So what does that make the
S-
company worth?
So it's more like, okay, it's like if you raise the $10 billion valuation, then
Exactly.
300 is exactly three
Hmm.
percent.
Hmm.
And then if you raise at a $20 billion valuation, then 3% would be $600 million, right? So
Right.
let's say they raise $600 million. That's absolutely nothing compared to the 30 billion that Anthropic raised,
Right.
and also that OpenAI like that $122 billion raise, right?
Right.
And these guys at Deepseek, maybe their model is super optimized and maybe it's so much better, but it doesn't fix the problem of compute, right? They are still going to need chips, they are still going to need RAM, they are still
Yeah.
going to
Yeah.
need
Yeah.
absolutely everything, right?
Yep. Yep.
And so all of that needs a lot of money, right? Like, okay, maybe they are going to be able to do great deals with Chinese companies. Maybe the government is going to do something there, but $600 million seems so small compared to everything that needs to be built for the AI infrastructure to be able to get DeepSeek to the level that they want to be, right?
Right.
So that's why like I completely agree with you on the part of, okay, maybe we have self-funded this up until now by ourselves, but now the
Essentially, yeah.
numbers get so big that we actually maybe would love a little bit of help into funding this thing, right? Because like maybe like they saw the investment we required to build the data center, a few billion dollars, and then they're like, okay, maybe let's do it with some more other people.
Yeah, exactly, exactly. Because
Yeah,
again, it validates the business as well, right? If they can get other
yeah,
people to invest in that business,
yeah,
and this also comes in the inside the context of the Chinese government. So Beijing is trying to discourage and in reverse, like strongly encourage people not to do listings and create entities outside of China.
And
Right.
the
So in
Manus
other words, like
story is
instead of doing some sort of Cayman entity or some Singaporean entity, which I believe, who was it that did the Singaporean
Manus.
entity?
Manus.
Manus, yeah. They're mad at Manus.
They are really, really mad at Manus. And
They're
actually,
mad
like
at
we,
Manus. They don't want DeepSeek to do the same thing. They want DeepSeek to list in Hong Kong, to domicile in Hong Kong if necessary, because still gives them access to international investors, right? Because international investors are less likely to invest in a company that's going to like list on the Shenzhen Stock Exchange
yep.
because they're not already invested there. And also is domiciled in Shenzhen just because it feels weird to them. But if it's domiciled in Hong Kong, which is still fundamentally part of China, but feels less like restrictive, and that's what the Chinese government is encouraging these, particularly these AI companies, to do. They want them to be Chinese.
Yep, for sure.
They don't want them to be based in Singapore.
And they definitely don't want Meta to acquire them.
Acquire them. Yeah,
And
exactly.
imagine, like, those guys did everything wrong, to be honest, right? Like, from a geopolitical standpoint, right? So
Completely.
maybe like there is some stuff that we don't know, right? I mean, for sure, there's ton of stuff that we don't know, right?
Yeah, yeah.
And so maybe like, they had their own reasons from doing this. But yeah, like, I mean, on paper, if you're a Chinese entrepreneur building something in China and then you go to Singapore, so then a US company can acquire you, like there is something that doesn't sound right, right?
Right.
And and then China not willing that. I mean, that's exactly the same as the US who also don't want their tech to be sold in China, right? Like it's just really the same thing, right? So so
So that was
yeah,
that was the other one of the other parts of these stories, right? Is that these Chinese model companies have been less likely to train their models on NVIDIA chips, but there was some rumor. I'm trying to find out, remember the name of the chips, yeah, the Blackwell chips, right, which are
yeah,
NVIDIA's best chips. There was some rumor again that DeepSeek's latest model was trained on NVIDIA's Blackwell chips, which
yes,
are fundamentally banned for export to China.
yeah,
But again, I said this many times, and I said it on ATP as well at the beginning of the week. You know, you're not the arms dealers are not supposed to sell like cruise missiles to people in like crazy countries, but somehow they get access to them. And chips are easier to transport, easier to hide. And like I could put a Blackwell chip in my pocket, probably not that small, but you know what I mean. I could put a bunch in a suitcase and just like bring them over to China and say it's just like my daughter's clothes and she's studying abroad in Beijing. There's plenty of ways to do this, and I think you'd just be ultimately naive if you don't think that somehow some of these NVIDIA chips are sneaking into China for them to train on
yeah.
these models. Yeah.
For sure, for sure. Like, that was like actually big news like a month ago. Like the guy from Summit Tutor, right? Like who got arrested because like he was just like smuggling these chips into China, right? Like, and that was not even a month ago, right? So to your point, for sure, right? Like this definitely does happen so much. But also like in this whole like set of articles that we have reviewed to tell you about this story, they were saying like that they were like starting to use more like Chinese
Yep.
chips, Chinese
Yep.
tech to incorporate into DeepSeek, and so that's why like maybe that's also like part of it could be just like, okay, let's just consolidate the entire stack together, right? Like, and then let's create something that's super integrated. That's what they love to do in China, right? And then let's make sure that every component actually work with each other, and that everybody has an incentive to win, right? Like
And
that's
actually,
what.
you're right here because
Mm,
the Chinese government, to the extent that they participate in planning the economy, takes a very long view.
yeah.
If that means that in the short term, the models and the chips and the AI stack underperforms what's happening in the West,
Yep.
they don't like it, but they'll put up with it if
Mm,
during the medium and long term they can both catch up and pass.
yes. Yes. Yes.
And
Yes.
the
Yes.
only way to do that is to have like a dedicated effort, as you were just mentioning, to everybody kind of get together and compete in like a friendly way
Yeah.
to help the entire country as opposed to hurt each other.
Yep. And when you think about it, like they have all the infrastructure, right? Like they have the data centers, they have the people, they have the knowledge, like they have
They
everything,
also have the
right?
manufacturing capability. Like most of these chips are made in either
Right.
Taiwan or in China. Yeah,
Right. So they have all the components, right? So it's so it's
exactly.
it could also just be like a consolidation story. Okay, let's just like we organize the whole thing properly, right, to really give us the best chance to actually go faster, because now the numbers get actually big in China, but also in the West, right? So
Yeah.
let's just be able, let's just organize ourselves properly. Yeah.
Yeah, we should talk a little bit more, just a little bit more about this retention story, right? Because
Yep.
it's not just theoretical.
No, it's true. Yeah, you're right. You're
Yeah,
right.
maybe you want to mention, because you were the one who brought this up, that like there are actually real people that really left
Mm-hmm.
Deepseek and really left to go to other companies, other big tech companies in China
Yeah.
to build AI there, not just to like take a job, as a computer programmer to
No,
build phones, right? So
it's true.
maybe you
It's
want to
true.
run through that a little bit.
It's true, it's true. Let's give our audience the examples that we have. So,
Yeah.
first of all, Luo Fuli. I'm really sorry if I don't pronounce your name.
I went to high school with that guy. No, I'm just kidding. I don't know that guy at all.
He contributed to DeepSeek's V2 model
Mm-mm.
architecture, so really, really
The newest
important
model,
job.
yeah.
Yep, and he was hired by Xiaomi to
Xiaomi,
lead
yeah.
Xiaomi to lead their AI business.
Right.
So
So
again,
he's literally been poached to go to another company, a
yeah.
big tech company with big resources in China that creates electronic devices. Xiaomi's a big company that everybody knows about, to
Yep.
run their AI business.
I'm checking out what's the revenue of Xiaomi, just to have an
Xiaomi's
idea.
huge.
$66 billion, Michael.
Yeah. Yeah. It's not a
So
small company.
it's massive, right, of revenue. So yeah, when you go to lead the AI business of a company that does $66 billion of revenue, you have resources, like a lot of
Yeah,
resources,
yeah,
right?
yeah. Yeah, he's not going to
So
some small startup.
nope, absolutely not. So that's the first example. Then second example, Wang Bingzhuan is a co-author of the first generation LLM at DeepSeek, and he left for Tencent,
Right.
so another giant, right? Another Chinese tech giant. And the third example that I wanted to share with you was Guo Daya, who is the researcher who proposed DeepSeek's GRPO training algorithm. That's basically
Exactly.
what they use to be super efficient in the way that they enhance the reasoning capabilities of the model. This architecture is called GRPO training algorithm,
Hmm.
and this person jumped to Biden's seed team.
And did he
With
get a raise to leave, or?
triple his salary, Michael.
Right. So
Triple
this
his
is the
salary.
point, right?
Yep.
So the point you're making is actually really good.
Mhm.
Fundamentally, these people are leaving to do AI some other places. They
Yeah.
must be really good at their job. And if this guy's getting, when I left one company to go to another company, I never tripled my salary.
Ah, you are less good negotiator than good Taya, Michael.
Yeah,
Much better than you.
definitely. I had that guy's negotiator on my team.
Exactly. You
I
need to use
doubled
him.
my salary for sure, but I never tripled it. Duh.
But yeah, but so I mean that makes sense to me, right? Like if you walk into a super great team, you believe the vision of D DeepSeek, you do great work there, everything's fine, but you have no idea like how much your share are worth, right?
But that's the point. You're making
Yeah,
a really good point, Mark, because if you're
exactly,
sitting there at OpenAI, you know what your shares are worth.
exactly. You
And
know
if you're
really,
at
really
the
well,
top,
right?
you see trading in the secondary
Yeah,
market, you know what your shares are worth. You're like, why would I leave? Because I'm sitting on $100 million
exactly.
worth of options. You're sitting at DeepSeek and you're like,
I have no idea.
oh no, we haven't
I
raised any money. Like, I don't know where I stand. You telling me it's a $10 billion company, but
Yeah.
what you tell me, what the market's telling me, the market's telling me they don't know.
And you just need to believe a CEO basically, right? And then also for the CEO to recruit other people, like it's all on paper, it's all promise, right? Like so it's
Yeah,
all
yeah,
really, really hard as well to go poach people from other companies, right?
yeah.
Because you can't show them what the valuation look like and what is the package actually look like. And so I can understand that from a competitive hiring
Same,
standpoint,
same.
when these guys, Tencent, Xiaomi, ByteDance, who are super well established, right?
Yep. Yep.
Then they can show you on paper that you are going to actually make real money based on real valuation and real information, right? So
Actually, actually,
tell me.
sorry. Yeah, I'll tell you offline. It's okay.
Okay.
But here's the other risk. Here's the other risk that these companies like DeepSeek would be taking if they didn't raise money and confirm their valuation.
Mhm,
If I want to get these names right, give me a second. If Luofuli leaves to go to Xiaomi
mhm.
to lead its AI biz, lead it, yeah.
Yeah.
Wang Bingshuan, who's the core author, left for Tencent. It's not clear what his responsibilities is
Mhm,
going to
mhm.
be. And then Guo Daya leaves to go to ByteDance, right?
Yeah.
the first person to leave is not the only problem.
Hmm.
It's then do they take other people with them because they just call them and they just go like, "Hey, Bob." Lots of
Yeah.
guys in China are named Bob, by the way. You don't know that, and they just go like, "Look, I know you have tons of stock options, but you know you don't know what it's worth. You have no idea what it's
Yeah.
worth. Come over here and work with me over at
Yeah.
Xiaomi, and I'll tell you exactly what your
Yeah.
compensation is worth. And when I give you stock compensation as well, you'll know exactly what that's worth too.
Hmm. Hmm. Hmm.
You tell me
Exactly.
what you think your value, what your value should be,
Hmm.
and I'll give you that compensation package.
Yep.
That's
Exactly.
the problem.
So that's really clear, right? This is
Yeah,
something really interesting to me here, Michael, is that all of these guys live from other Chinese giants. There is no example of guys who left for an American giant. I think that's interesting. That's
yeah.
really
I mean,
interesting.
yeah, yeah,
Like I don't know, maybe they don't speak English. I don't know, maybe right, but they all stay in China. They all stay in China. They all work into these, super large tech companies in China. And I'm sure those guys, they are super brilliant, right? Like they must be amazing. They must know really well how all of this thing works. Why we don't have any example of Meta who poach people from everywhere, basically, right? Why they zero would it from Meta? Why? None of them. So I think
yeah.
that's
I don't know.
interesting as well.
So we recorded today with Nicholas Liao, yeah, from
Yeah,
Wallet,
yeah, 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 yeah.
and when you go and listen to that, he says the this is him talking, not me, right?
Hmm.
The Chinese are so hardworking and they want to work on hard problems and that um, they want to do big things and they're very proud of what China itself is accomplishing,
Oh, okay.
right? And he spent a lot of time. He was like, maybe we should stop talking so much about this China thing. I was like, I didn't bring it up, dude. You did. I think that's part of the reason why is that there's a certain
Okay.
amount of pride too. It's like if they're going to do something, why don't we help other Chinese companies get better as opposed to going and helping other countries companies get better, particularly in an industry that's so strategic like artificial
Yeah,
intelligence.
yeah, yeah. No, that makes complete sense, and that's
Right.
definitely understandable, right? Like, but also it's like China has the resources to make it work and has proven it, right?
But
It's
yeah,
not like I was about to give the example of France. Like, for example, for sure, I'm French. I would prefer to work into like a really great company in France and to help build something there, right? But the problem would be France doesn't have the infrastructure, doesn't have the capabilities to actually compete with OpenAI or Anthropic, right? It's just not
no,
possible. And there is no example of France having built any super large global tech company where we could be okay, there is like some stuff that we
exactly.
could do, right? I mean, there is like the Airbus and the defense sector that is really
Yep,
strong in France, but no consumer product, right? Like
yep,
all the
yep.
tech that we use, it's all American tech in France. But China is not that, right? China
No,
has the giants, China has the infrastructure, China has the resources, and they have the example of actually, okay, we know how to build something that can compete with the West, right? And actually, maybe
yeah.
sometimes do
And the
even
gap is
better, right?
closing on these transformer models, on these
Yeah,
AI models.
yeah,
The
yeah.
gap is closing and it's closing really quickly.
Very quickly. Yep, very,
Yeah,
very quickly. And I think like, the automotive industry is one of the best example, right? Like the BYD and all the other brands doing EVs, right?
yep.
They have crushed it, right? They are crushing it. They keep growing like crazy. They are doing amazing cars, and that's all from China, right? And when you
Right. And
think
but
about,
and I talked about this, Martin, when I did my segment on
yeah,
sorry, on Deepseek on ATP Insights.
mhm,
The EV business is a model for China to understand like how to take a technology that already exists, commit both private and public money to it, and then start dominating globally.
yeah, 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 yeah.
Right. Right. That's the
They,
perfect example of this. It
exactly.
is the model for how they're going to do what they're doing in AI.
Yes, and so that's why, like, when you have this massive example of something that has worked so well at such a large scale, right? You're like, you know what? We can just do it again with AI, right?
Exactly. And
And
both of those industries are strategic to them too.
yeah,
EVs
yeah,
are a
yeah,
new thing,
yeah,
relatively new. Yeah.
yeah. But the automotive industry is so large into any country, right? Like it's so big,
Yeah.
like it's
So
like
important because there are
it's so
components that go into
important.
all these little things. Yeah.
Yeah, and
Yeah.
plus like it's also tons of jobs. It's also like a lot of money moving around. So like for any country,
Mhm.
they would want this money to stay home, basically, right? Like you don't
Yeah.
want the money
Yeah.
to go outside of the country. So it made complete sense for any country to have like a very strong automotive industry, China included, right? Because like that's one of the largest domestic market in the world. But they did such an amazing job at then exporting that and
Yeah.
building
Yeah.
really competitive cars
Exactly.
compared to the cars that were in the West and
Yeah. Yeah.
really well established, right? So when you have this example, plus they have the infrastructure, plus they already have the tech giants, I mean, for sure, like you want to give the shot, huh?
Exactly.
Right?
Exactly. Okay, man. What else do we have tonight?
I think we did matter. That was the last story that we wanted to share today.
So interesting.
Yep.
And if you look at it, a lot of conversation about artificial intelligence, it kind of mirrors some of the conversations we were having today at the event as well. Yeah.
Yep, exactly. Yep, exactly,
Super
exactly,
cool.
exactly, exactly. So
Okay.
yeah, we good. See you tomorrow for our next AGTP daily.
Let us thank everybody properly
Yep.
for coming and joining us today. Give us a thumbs up on the video. Thank
Yep.
you again for joining us. Thanks for coming to AGTP Daily. We really appreciate your time. There are plenty of other things that you could be doing when you're watching us and when you're participating in these videos. Subscribe to our YouTube channel. The YouTube channel is growing fast. What are we, 29,000
Yep.
subscribers already?
Yep. 28.
And follow us on all of our socials, on X, on Instagram, and on LinkedIn. Let us know in the comments if there's anything you would like us to discuss in any of our upcoming shows. We love doing AMA. We love getting questions from our community. It's really important to us to be able to interact with you for things that really interest you. We will be back again tomorrow, every day, every weekday at 11 a.m. Eastern Time in the United States. My name is Michael Waits. That is Martin Runford. I'm going to say goodbye for now.
Thank you, everyone. See you.